is the ending of the month, and this will be a two-part recording, with the first part only covering the monthly, and every now and again I'll touch on the weekly, but I'm going to really go into depth with the weekly, the daily and the intraday time frames with part 2. It's only because I finished work very late today. I've been up for more than 24 hours. I mean, I've been up since, I mean, you could argue and say 6 in the morning. I'm not talking about today, I'm talking about yesterday. I had a 2-hour nap. I'm back at it, so yeah, I'm not going to really do too much, but I've already had a look at and done my studies on the market already, so I'm just going to outlay it to the ether. And what I'm having a look at here is the order block, having a look at the high. So this is the dealing range, high to low. The inefficiency that price is working within is this right here. This is a discount wick which price is currently trading in at the moment, and we've closed at 4.017, which is higher than the 50% quadrant of this discount wick. Now it's a monthly time frame, so when I zoom out to have a look at the trend, you can see that from 2020 going up to 2023 we've been on a bull trend. We traded back down, tapped the 3-month bullish order block, and we did not create a higher high. Alright, so we'll go higher high, higher low, higher high, higher low, lower high, lower low, higher high. So this is consolidation. So the dealing range that the market is currently in at the moment is between that 4.089% region and 3.599, and within that dealing range the imbalances inside of that range, which is this buy side imbalance, sell side inefficiency, due to the fact that we had a shift in market structure there. You could say within this short space of time we've had 4 consecutive down close candles on a monthly time frame. Right, candle bodies trading and closing lower than the previous ones, with the wicks also causing the damage. But you can also see that the prior month we failed to close below the prior month's low, which is September's low, and this month we've closed and we've still not managed to close below that September low. Alright, so I've identified that the current dealing range that the market is trading in is from this high to this low. The imbalance, buy side imbalance, sell side inefficiency, is where the market is currently trading inside of. Alright, so essentially I should be waiting for a breakout below these lows or here. But when trading inside of these ranges, it's very important to note the quadrants inside of wicks and fair value gaps and order blocks, and this is the order block that comes to mind, in which price has traded down to it once but failed to stay down below that level for some time, because as you can see it bounced right back up. Prior month we got close but we did not tap. This month, inside month, high, low, intact, but I do believe we're going to have one more tap before we see some sort of a pullback. There is an inefficiency right there, and this is a bearish hammer inside of the discount wick, inside of a bullish fair value gap. Right, but after creating the highs, you'd want to see these lows maintained, right? Well, studying this order block to see how strong would price react once we get down into this region here, because we've already seen a delivery and price or business being transacted inside of this area. So I'd like to see how it respects that 25% region, that 3.937 area, and that will allow me to study whether dollar index is most likely to travel to the downside or we'll see some form of a rally. I'm going to move over to the 10-year Treasury note futures market now. It's a bit more tricky with this one, in the sense where you've just got efficient delivery, high resistance going forward on a monthly time frame. This inefficiency has been delivered to. This volume imbalance is currently where price is trading at the moment. We have seen the price trade to this area before, but we failed. Created a spinning top, bullish spinning top, with price trading down into this buy side imbalance, sell side inefficiency. This high right there that was created on the 1st of March 2024 is the area, as the price point, right, which stretched out in time on the 1st of July, which it met, would be the shift in market structure, since the market has been bearish since 2020. It's pretty much the opposite as to what happens with the US 10-year yields. Okay. So once you see this shift here, once I see this shift here, I'm looking at this imbalance in price, and in all honesty, I'm looking at pretty much all the inefficiencies in price to see how it would react. You get this drop, and instantly you could tell that this was negated at this time. We drop down, we close lower than the SIBI. So then now I'm looking at this down close candle. Now I'm looking at this order block, because you've seen a drop in price, you see a gap, fair value gap, which validates this as an order block. So once I see this, then I'm studying whether we're going to trade down into the midpoint, the low, and this order block right there. So what do you get the week after? We trade into the quadrant, so we trade into that mean threshold. The week after, institutional order flow entry drill, small rally into that inefficiency in price, and we take the lows out, trading down, and not yet meeting that order block there, but we trade down into the inefficiency outlined right there, which is another order block. The week after, we tap and then we rally higher, shift, gap, support, hammer, 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 all in this area. Highs, 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 relative equal highs. Bearish order block, price failed to reach up into this area before dropping, taking these lows out. If this is an order block and the market reaches above these areas here, then this whole area here could be used as an order block going forward in the future. High resistance, so I am expecting the market to push very fast above these relative equal highs. If that is the case, then I can expect US 10-year yields to continue in price, with the order block at 3.932 being the first point of interest and 3.919 being the second point of interest. I mean, that's a stretch goal. The lows would be the 3.599, but I mean, on a monthly time frame, I'm looking for the lowest hanging fruit, which in this case would be this order block here, which I'm targeting. Moving over to dollar index now. 2020, 2021, we take these relative equal highs out. This candle here that was created on the 1st of April 2022 is a candle that allowed for the market to print a gap, which is a buy side imbalance, sell side inefficiency. Stretching this out into time, you can see how price reacted whilst dropping back down into that bullish inefficiency. But after we saw this high taken, we dropped down maybe 25% of the way through the previous month's candle, booked the highs, shooting star, following candle after, took the highs, and it continued to rally higher. There was a higher inefficiency, 6 month SIBI, which the market rallied up into. We retraced, and then we saw some sort of consolidation. This down close candle, very important. We filled, partially filled, at least 90%, 95% of the way filled this gap. If I saw something like this on a monthly, I'll be looking for these relative equal highs and this SIBI here. We get that to a certain degree. This volume imbalance was where the market traded up into. We didn't really get as high as the upper ranges, the upper portions of the sell side imbalance, buy side inefficiency. Dumped back down, looking at the midpoint, rejection, dealing ranges high to low, consolidation, drop, sell side taken, buy side relative equal highs taken, gap filled, 6 month SIBI also met, consequent encroachment of that SIBI failed to meet. If you look at how the candles rejected and reacted to previous highs, the candle body failed to close above this up close candle there. Low resistance, sell side, SIBI, inversion, fair value gap, dump, sell side liquidities there. Sell side, we've got a dragonfly doji candle taking the lows out there. We've got an inefficiency there that the market has not yet met. Premium wick, which the market has reached 25% of the way through. And I'll be honest with you, on a monthly time frame, if I'm looking at the bigger picture, I'll have to go back and have a look at the 6 month and start from there, right? What we got there is a shooting star, midpoint, rejection, market traded back up, attacked. This last up close candle before we saw the shift in market structure. This is the order block, rejection, and this is on a 6 month perspective. We've got 1 month left, right? This is COVID low, this is COVID high. Inefficiency. Quadrants. Quadrants. Order block. Fair value gap. Relative equal lows. Fair value gap again. Support. Bullish shooting hammer candle. Failed to take the highs, but the lows stayed intact. Shooting star. Rejection down, upwards. Sell side taken. Respect. We're going to drop down into this BISI. Three-month candles. See for US 10-year yields, right? This was the blowout top. We're still trading inside of a premium. Discount is below here. Inside of this wick, we're at a discount. Order block, candle body failed to close. 6 month. You know, it's funny because looking at it from a 6 month perspective, anytime a 6-month candle closes and it's an inside candle, the following 6 months always takes out some form of buy side or sell side. Close, don't get nothing. The candle comes, takes sell side out. This candle comes, takes buy side out. This candle comes, still got 1 month left. If we had a chance to take any liquidity out in that 6 month, it would be sell side. We are trading at a discount to this wick here. Nearest inefficiencies there. Month consolidation, dealing range low, dealing range high. So we are working within this range here. It's a very tight range, you know. You gotta know what you're doing. Order block. Yeah, there's a lot going on here, man. So now if I look at the monthly, 4 consecutive down close candles. Zoom in. I do believe there's a chance we can reach down into that region there, but at the same time, in saying that, that could be the very manipulation that we need in order to push price higher into this inefficiency here and even potentially run out these highs. But we'll take one things a step at a time. Same here, 6 months, inefficiency. Shooting star. Shooting a hammer. I keep calling the hammer shooting stars. Hammer, buy side, hammer. Failed to get down to this region here. Looking for a rally higher. From a 6 month perspective, compare. Very similar price action, isn't it? 3rd of July. Highs, inefficiency. High, low. This is the support price. Order block.